Hey guys, welcome back. Well, I've had to pivot this video. I had a plan to go through a number of different topics, but we just had earnings that were dropped that have rattled the entire market. SK Hynix just dropped their quarterly earnings, broke all kinds of records for the company, but missed expectations or missed what the market was expecting to see for their revenue, and it had an impact on the market right away. The sentiment, if you were watching in the after hours, flipped from a green for Micron based on what we saw with Seagate. It flipped immediately, and there is significant pressure on the memory stocks right now. So today I want to go through those earnings. In fact, I want to cover all of the earnings today that have implication for the memory sector, but we have to focus on the SK Hynix earnings. What does it mean? What did the company actually report? And what can we expect to see tomorrow at our opening bell? We'll take a look at the KOSPI and how it had an impact on today's market, because we saw that negative momentum just carry across the Pacific into our markets, the opening bell this morning. And frankly, the memory sector was under pressure all day long today. All of the AI hardware names were under pressure today. So we're going to go through that. We'll also talk about the current sentiment in the market right now. Why are we seeing capital rotate out of the AI hardware names? Frankly, it's for a couple reasons that I'll cover in the video, but there is clearly a shift in the mood, in the sentiment right now this week as we begin to de-risk for big tech's earnings starting tomorrow. Lots to cover in this video. If you haven't done it already, though, make sure you hit like, make sure you subscribe to the channel. Let's buckle up. Let's get into all of the data that's hitting our markets right now. It's hitting the news wires right now and having an impact across all of the stocks that we follow on this channel. So guys, let's get started. Let's pull up the SK Hynix earnings that drop. We'll walk through it together just to see what the results were. So if you want to hear the press conference, it's probably in about 30 minutes. You know, at their opening bell, their market will open in 30 minutes right now. So we'll see what impact this has on Samsung, on SK Hynix, on Kioxia. We know that if those get pushed down in significant pressure today and they're live trading, it's going to come across into our markets tomorrow morning as well. This, as I mentioned, is going to be a volatile week for the sector, a volatile week for tech stocks. But let's just scroll through. Here's the big number, the revenue analysis. So you can see on the screen that they reported 79 trillion, is it, I think, or trillion won, excuse me, for their Q2 quarter. It's up 257%, but the market was expecting to see 84 trillion won. So this is what's driving the sentiment right now. If you look to your left on DRAM, the average selling prices are up 30% quarter over quarter. If you look to your right in NAND, it's a 50% increase in the average selling prices. So those are all strong. Guys, these are phenomenal numbers for the company. They're record-setting numbers for SK Hynix, but it's not what the market expected to see, and that's what's driving the negative sentiment overall. So let's just scroll down to a few more pieces. Operating profit, you can see it's a fifth consecutive record high quarterly for them. Their operating profit was just over 60 trillion won. We're seeing DRAM and NAND price increase and cost improvements. Operating margins at 76%. That is a record for SK Hynix. That's exactly where we needed to see that number, what the market was expecting to see. If we scroll down, let's see if we can get into a little bit more of a breakdown by the business. Let me scroll into the results. Sorry, guys, these just literally got dropped, so I haven't had a chance to look through them before this video. I wanted to bring it right to you, fresh from kind of hitting the news wires. You can see long-term agreements, 10 long-term agreements negotiated with key customers, continuing further discussions with other major industry players. We look across HBM4, shipment in Q2, customer required speeds, industry-leading power efficiency, cost competitiveness, full ramp plan for second half of this year. HBM4E samples to major customers in the first half. It's supplied on their 1C nanometer, and they are committed to maintaining HBM leadership through comprehensive competitiveness across performance, stable supply, capability, and cost. DRAM, I'm going to get to this later, but they have fully commenced supply of their SOCAMM2 products based on their 1 nanometer. And NAND is accelerating their node migration and strengthening portfolio with focus on high capacity, high performance products. So overall, the product strategy, very strong for SK Hynix. It really is just the fact that they missed that 84%. So let's see what it's doing to the stocks. It's actually gotten a little better. I would say, as scary as this looks in the after hours, we know what Micron did today, under pressure all day long, down, over 8%, close to 9% today, $79. It was up today. Right after the Seagate earnings, the stock was trading higher. It was up about $10. And as soon as these results hit the board, I initially saw this get down to as low as $40 of pressure further down, about a 4 or 5% pressure. So it's coming back right now in the after hours. I think people are realizing, as they start to dig into the earnings and look beyond just the headline, they're starting to realize that these weren't as bad as they expect. And there's still significant numbers across the board. We're looking at their revenue up almost 260% a year. We're looking at DRAM average selling prices up, NAND average selling prices up. They're records across the board for the company. It's just that headline miss that's going to drive algorithmic selling. That's my concern. We're going to see Samsung, SK Hynix, Kioxia under pressure today when those markets open in about 30 minutes. Let's see what type of impact it spills over into our markets. So, guys, I wanted to bring that to you right away. We will be under pressure tomorrow. There is no question. If we look at how the market started today, and I think we'll see here, the KS yesterday in their trading, it was dragged down by 11%. So this was the momentum that came across the Pacific to our opening bell that put pressure on our stocks, our AI hardware stocks, right from the gate, right from the opening bell this morning. But we know we saw the pressure. It's all because of the CXMT story. The CXMT, their IPO, as well as the lithography machines that are being produced in China right now, that is continuing to drive anxiety, to drive worry in the market. It's pushing down ASML. It's pushing down the other manufacturers. It's pushing down the memory sector also. And it pushed down the Asian memory players as well. So all three of those had significant pressure. And what did it do to our markets? It came across, and this was the same sentiment that we saw yesterday, that we saw the hardware stocks on the left there. It's just under pressure throughout the day. If it's the only difference is NVIDIA was up today. NVIDIA was down by about 5% yesterday, but we do see AMD down significantly. We see that Broadcom was down by about half a share point, Intel down by over 5 share points, ARM 8, Marvell down over 7%, Qualcomm down. Look at the memory players, Micron down over, almost 9% today. If you look over to the right, you see SanDisk down by over 14%. That stock has lost 50% from when we're up to about, over 2,000 a share, 2,100 a share to where we are right now. Significant loss of value. We have their earnings next week. We'll see if that can be a catalyst. But right now, these stocks are under pressure. Seagate, prior to their earnings, was down 8.5%. Seagate just dropped phenomenal earnings. I'm going to go through it in a moment. But Western Digital was also down 7%. So we saw this tide come all the way from the Asian markets, the pressure that they felt all the way through their trading, and just jumped into the U.S. markets at the opening bell. And this is this global contagion that we're seeing right now, how connected these memory sectors are. When the performance is down in the Asian players, it spills over right into the U.S. players. And that's why I want to keep my eye on. At the end of the video, we'll take a look and see what SK Hynix, what Samsung are doing at the opening bell in their markets, which will be Wednesday. But let's jump over and just talk about the next segment, because I want to address just the sentiment. There was a great article here that covered the sentiment we see in the market. Because, guys, in my opinion, right now, there's a number of things. We have the CXMT story, the IPO, China producing their own lithography machines. All of the impact of that is driving kind of anxiety in the market. We also we continue to have this CapEx, this return on investment worry. What we're seeing with the hyperscalers, are they spending too much money? We're starting to feel significant amount of pressure. And they're wondering, there was a story in Wall Street Journal today that said, which one will blink first? Which hyperscaler will say that they're slowing down? Because right now we know they're probably in a position where they feel they can't say it because they'll feel like they'll be at a loss versus a competitor. But the market sentiment is shifting. We're starting to feel significant worry about the spending going on, the return on that spending, the negative free cash flow that we saw with Google. I predict we're going to start to see more and more. We're going to see more negative free cash flow this week when we see Amazon, Meta, Microsoft, maybe not Apple, but when we see the other three report, there's going to be negative free cash flow. There's going to be increases in their CapEx. We're going to feel more pressure in this market because of that. The sentiment is shifting right now. And I think the memory stocks, the AI hardware names that we follow on this channel will be under continued pressure all week long. So like I said in the beginning, we need to buckle up. This is the price of admission in this trade. We know it's volatile, but we also know that the long-term fundamentals are on our side when we shift through this negative sentiment we're seeing in the market right now. We are just navigating some really choppy waters right now. But look at this sentiment right here in this opinion article from MarketWatch. It says Alphabet, Tesla took a hit from soaring AI spending. Will Microsoft, Meta, and Amazon be next? As we scroll through, there was a few things that I really wanted to call out. One is all around the credit default swaps right now, because you can see credit investors are growing more cautious. And this is a huge sentiment shift in the market right now. It's driving a lot of anxiety. It's driving a lot of the downward pressure that we're seeing in the names, not only with the hyperscalers, because actually have been up the last couple of days leading up to their earnings, but it is driving downward pressure with the suppliers, with the chip manufacturers, with the AI hardware names. But we see what the article says here is that these companies continue to spend. Many have increasingly tapped the credit markets to finance their AI infrastructure buildouts. At the same time, credit default swaps for many of these companies have widened notably. That may suggest that the credit investors are demanding more protection as debt issuance increases and capital spending accelerates, or that they're simply reassessing the credit risk associated with these increasingly capital-intensive business models. The one reason this may be happening is that analysts forecast free cash flow for these companies to fall dramatically over the next 12 months as they increase spending. It's exactly what we saw with Google. They expect to see this with the other three, maybe not Apple. But as they go on to say here, you can see consensus estimates suggest that Apple's CapEx over the next 12 months will remain relatively low at around $13.4 billion. Meanwhile, Tesla's spending expected to reach $22 billion, which is still modest compared to Meta at $142 billion, Microsoft at $180 billion, Amazon $216 billion, and Google at almost $252 billion in the next 12 months. So rising capital expenditures and declining free cash flow mean that these companies may become increasingly reliant on external financing, whether through debt or through equity. At the same time, credit default swaps, the spreads have been widening, suggesting that credit investors are becoming less comfortable with that shift. If we scroll down, we also see that this is what I just mentioned. We'll see if this comes true on what they report. Tomorrow, we know that we have Microsoft and Meta. So Microsoft is expected to report free cash flow of $17.4 billion this quarter, down from $25.6 billion last year. So they're at a negative free cash flow compared to last year. Meta is expected to report a negative $178.4 million compared to a positive $9 billion a year ago. And Amazon is forecast to decline to a negative $3.8 billion from a positive $332 million a year ago. Apple's the exception, they said. They have a free cash flow that's expected to rise to $30 billion from $24.4 billion. And this is part of the reason we've seen Apple recently not face the same level of sentiment. Their stock has been moving in strong momentum. They actually became the largest market cap company again. They passed NVIDIA. But this is the pressure that they're facing. And you can see the price of unintended consequences. If hyperscaler spending slows because financing costs rise or free cash flows weaken, semiconductor demand could eventually feel the effects. Heavy spending and declining free cash flow, guys, they create, as the article says, unintended consequences, meaning that the companies must either find additional ways to finance their investments or eventually begin cutting back on those investments. That is when the risk begins to extend beyond the mega cap tech companies to the semiconductor businesses supplying the hardware behind the AI ambitions. And that's what we're seeing. We're seeing that while most investors naturally focus on whether each company, when we see earnings, we focus on whether they beat revenues, what their EPS was, what their forward guidance was. What they're saying here is that credit markets are likely to be watching a different set of metrics. They're looking at CapEx. They're looking at free cash flow, funding needs. And if CapEx continues to accelerate while free cash flow deteriorates, it would reinforce the trend already developing in the credit markets and could increasingly make it difficult for big tech companies to sustain the premium valuations they have historically enjoyed. So ultimately, the implications could extend across the entire AI supply chain. Guys, I'd make the argument that that's exactly what we're seeing right now. If you look here, the AI supply chain is under pressure right now. And this is the sentiment that is changing, what I just went through. We also saw this article in Wall Street Journal saying which tech giant will blink first on AI spending. This is what made me think, will any of these CEOs step to the mic and say that they are slowing down? Will they say they have any concerns whatsoever? Because I've been in some rooms where we prepared some executives to speak to the analysts, and they're very measured. They're very tactical with their comments. So I don't think we'll see any of the CEOs step up and say that they're slowing down or say that they're not as committed to the AI infrastructure build out, because it is a double-edged sword for these hyperscalers. If they admit they're slowing down, the stock will be under pressure. If they show that they have too much CapEx, the stock will be under pressure. So I think they're just going to drive forward with the story, and their belief in building out this AI infrastructure will lead to monetization. That's what investors need to see. That's what the market needs to see. And I believe that's what these companies also believe. And that's the story I think we will hear both tomorrow and Thursday when these hyperscalers report. But right now, guys, the sentiment is very wobbly, let's say, in the market. Right now, it is driving downward pressure on the AI hardware names. It's what we saw throughout the day today with Micron. And this is getting better. Look at it. 1.3%. It was at 5% maybe 30 minutes ago. So this is improving as we go along, as the initial shock of the SK Hynix earnings hits the street and people get to actually read through the report. I think I'm going to come back to this in the end of the video and see if we're close to flipping it back to the green, because otherwise the sentiment was really strong today. Let's go through some of the earnings. All right, there was 4 that we had today that I want to discuss on today's video. 4 big earnings that have impact on the AI infrastructure. And you could see we have Corning, we have Teradyne, we have KLA, and then I'll go through Seagate separately just because they're so connected to the memory sector. But these were the 4 I was tracking throughout the day. I would say all 4 were positive, but 2 of the 4 had a slight miss with regards to their forward expectations. It was right in line with what Wall Street expected, but it wasn't bold enough. It wasn't strong enough or more kind of optimistic looking forward to move the share. And these shares for both Corning and KLA were under pressure. Corning under pressure throughout the day because they reported before the market opened. KLA under pressure in the after hours because of what is perceived as a miss for their forward guidance. Teradyne had a great report. They actually had a positive impact in the after hours. Seagate, before the SK Hynix report, had a positive impact as well. But let's go through these 3. So Corning was a quarterly beat. The forward outlook, it was below elevated expectations. That's a perfect way to say it. It's below elevated expectations. But if we look at their results overall, so Corning, they had $4.74 billion. It was up 17% year over year. Their core earnings per share was 78 cents. That's up 30% year over year. This is a big piece here. Their optical communication revenue, so the optical fibers, how Corning has been shifted, that is over $2 billion in revenue this quarter, almost 50% of the total revenue for the company. It's up 32% year over year. And the enterprise networks revenue was $1.31 billion, up 65% year over year. If we do a read through, we see that the optical networking demand remains strong for Corning, but outlook was below elevated investor expectations due to capacity constraints and continued weaknesses in consumer end markets. So Corning is under pressure all day today. Despite having a strong quarter with record optical communications revenue, forward outlook was below expectations and stock lowered throughout the day, and it's lowering in the after hours as well. Now, if we shift over to Teradyne, we know that Teradyne, it had a beat. It had strong forward outlook. The revenue was $1.33 billion, it's 16% year over year. Adjusted earnings per share was just under $2.50 a share, up 19% year over year. Semiconductor test revenue, this is the important piece, is up 17% at a $1.12 billion. And their quarterly guidance moving forward was above consensus. So the read-through for this report was that AI semiconductor test demand remains robust. Management highlighted continued strength across the wafer fab investments and strong visibility into 2027 demand, by AI adoption and advanced packaging. So it was a strong move in the after hours for Teradyne. We see a strong beat, strong guidance. Semiconductor test demand was accelerating, and the stock is higher in the after hours. Finally, KLA, they beat their quarterly earnings, but their forward outlook was below elevated expectations, similar to Corning. Revenue for KLA in the quarter was $3.66 billion, up 11% year over year. Non-GAAP earnings per share was just over $1.05. It was up 14%. Estimates for them were $1, so they beat estimates there, and it was 14% growth year over year. The non-GAAP gross margins was 62.4%. It's up 80 year over year, and net income was just about $4 billion, 10% year over year. If you look at their guidance to the right, they guided for $4 billion plus or minus $200 million. Their non-GAAP gross margin was guided to 62.5%, and you can see the earnings per share was guided at $1.16 plus or minus 10 cents. So that was right in line with what Wall Street was expecting, but it wasn't strong enough for them. It wasn't enough to drive their next quarter, to drive the stock, what we're seeing in the after hour right now. But if we look at the read-through, the memory business mix is 27% of the semiconductor process control revenue right now. 90% of that is DRAM, 10% is NAND. Advanced node logic and memory investment remains healthy, according to the CEO. And AI-driven process control demand continues for KLA, but they are under pressure right now. Strong quarter. It was a strong quarter with healthy margins and profits, but guidance failed to exceed lofty expectations. Stock is lower in the after hours. So let's jump over and we'll see if we can just quickly take a look at those three. Here's Corning, what we're seeing right now. Corning was down 12% today. Pretty flat right now in the after hours, but it's still down by about 0.45%. It just jumped up. KLA, let's find KLA. And sorry, I think actually it might be back up. Let's see. Sorry for rolling around. Probably easier if I just plug it in, but I think I know it's up here. Let's just make sure. KLA, there we go. KLA is right here. You can see down today 6%. The after hours continuing to push. So they were down with the AI hardware pressure that we saw across the board, but down today by 8.75% based on what we are seeing in that misguidance overall. And then if I scroll down to Teradyne, Teradyne was the one exception. We said of the three I just highlighted, they actually had improvement, and take a look at what they're doing in the after hours. So this is the power of their earnings report right now. They were down today with all the other AI hardware names. That contagion that came across affected all of them, but their earnings report has lifted them up 12% right now. It's almost $40 gain in the after hours based on what they reported. So let's jump over to the other key earnings, the one that is directly related to the Fab 5 group that we follow, Seagate. This is the one I was most excited about today. If you take a look at the top screen, you can see that AI storage demand, it accelerates. Strong results, strong outlook for the company. Q4 earnings, let's take a look at it. So revenue for Seagate was $3.63 billion. It was up 49% year over year. Adjusted earnings per share, $5.71, up 120% year over year. And their GAAP EPS was 5.58. So they beat revenue. They beat expectations. Strong operating leverage drove EPS growth significantly higher than revenue. If you're looking in the middle column here, what drove performance? So robust hyperscaler demand. So continued strength from cloud and hyperscale customers. AI is creating more data. It's the need to store that data, and why the HDDs are so important right now for all that cold data storage that we've talked about so much on this channel. Nearline HDD momentum. So high capacity nearline HDD demand remains exceptionally strong. Strong pricing and product mix right now is driving Seagate as well, and powerful operating leverage. So disciplined execution, driving significant earnings per share expansion. They also talk quite a bit about their HAMR technology, their road to the 100 terabit drive. So very exciting earnings for them. If you look at their guidance, this is also where they crushed, where they outpaced expectations. We're looking at revenue that they guided to $4.1 billion plus or minus $100 million, where Wall Street only expected $3.8 billion. Adjusted earnings per share, $7.30 plus or minus 20 cents. Consensus was $5.85. So look at that jump, 571. They're now saying $7.30. So guidance was significantly above consensus. Management expects continued strength in cloud and hyperscale demand. Key takeaway for Seagate is that AI infrastructure spending continues to expand beyond compute. Seagate's results reinforced sustained demand for mass capacity storage as hyperscalers scale AI workloads. And let's see the impact that it had on the stock. Because like I said, it was positive in the after hours. Now, I haven't looked at it since SK dropped their earnings on the street. But let's see what we're seeing right now. Still significant, right? Pressure today for Seagate. They were down 8.5%. Now, if you look in the after hours, the stock is up 6.25. It actually gained back about $47. So really nice to see that response. But the stock is still very low. In fact, if you look on the day, it dipped under $700. So we're starting to march back up over 800. These were phenomenal earnings. Let's not kid ourselves. Seagate had a great earning print that they dropped in the street today. I thought this would carry the momentum for the sector tomorrow. Tomorrow, though, is a huge day overall. We're going to have Microsoft. We're going to have Meta. We'll have others reporting as well that'll give her signals, but it is those two hyperscalers that are going to drive sentiment overall. Let's jump over. We're about 10 minutes away from that market opening. So I want to really keep my eye on SK Hynix and Samsung to see how they open. We'll come back to that. Let's just take a look, go flip back to Micron and see what we're seeing. Guys, there it is. This is the signal I love to see. This shows me that the market has digested that SK Hynix earnings. We flipped, guys, it was down $40 right at the get-go when it hit the street. We're up now $12.50. Moving back in the right direction. So this tells me that rational minds, they move past the emotional headline that hit the street of SK Hynix misses earnings and algorithmic selling hit. We saw fear and anxiety hit, but then we actually read through the report like we did and we see, hey, wait a second. This company just set earning records across the board for them, something they haven't done in the past. And we're starting to see a response as well. Let's see if we can continue to carry that forward, because my only worry, quite frankly, will be when SK Hynix and when Samsung's opening their market, if they're under pressure today based on those reports, based on the continuing fear that we're seeing out of China, based on the worry, anxiety that I went through around the credit default swaps and the concerns around CapEx and free cash flow with the hyperscalers, if they continue to push down, it may very well come back into the U.S. markets. But right now, I think the sentiment, based on what we are seeing with the earnings from Corning, from Teradyne, from KLA, and most importantly from Seagate, it is moving the sector back in the right direction. Hopefully tomorrow we see strong demand, strong signals from the earnings as well that will continue to push this sector in the position that we need it to be. So guys, that's enough for me tonight. That's a lot that I covered in a long video. So I've got to stop because we're at 28 minutes already. I could keep going on, but I wanted to share that with you overall. I hope that you took away a few pearls from this video. Drop in the comments below. Let me know how you're feeling, what your sentiment is right now. But let's get ready for another big day tomorrow, a ton of signals. I hope you have a great night.